Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com, Telegram Vietnamstockmarket.entry, with the phone number is +8491 432 6556. Or you can also scan the two QR code on screen so that we can support you. And the other way to contact with us is please follow and subscribe to channel name Areca Capital Channel. The owner of this YouTube channel is Areca Nguyen. She's a personal financial advisor and a Viet Capital Securities stockbroker manager. You can contact her with the email hongzhengyuan@vcsc.com.vn with the phone number is +8491 432 6556. We always welcome you to our office on the 11th floor, 109 Trường Đạo Street, Hoàng Kim District, Hà Nội, Vietnam. And today I want to share with you about the Vietnam Strategy 2023. With the second part is macroeconomic risks in context. And I will cover all the contents to you guys. Challenging H1, H2 to anticipate global recovery. Macroeconomic risks in context. Vietnam macro, rising external and domestic headwinds. Market data. Banks' uncertainties remain, but valuations are attractive. Other financials. Higher interest rates to benefit issuers. Consumer attractively value compares to long-term prospects. Transportation, logistic players expanding capacity to support growth. Aviation continues to recover. Real estate, shorter recovery pathway than last cycle. Real estate parks, structural growth should continue, but headwinds to impact short-term outlook. Construction and materials, challenging year ahead. Industrial manufacturers, own businesses that promise near-term recovery. Oil and gas and LNG fired power plant capacity to expand, spurring growth. Power and water, growth in renewable energy. VCI rating system. Macroeconomic risks in context. The arrest of the chairwoman of unlisted real estate conglomerates, Van Thịnh Phát, that subsequent unusual deposit withdrawals at Saigon Commercial Bank, also unlisted in early October 2022, prompted the question, does Vietnam have structural problems similar to the 2008 and 2012 periods? China today or Asian economies such as Thailand in 1997. There are some obvious similarities. 2022 saw a sudden tightening in monetary conditions after a period of increasing leverage in the economy and land price appreciation. However, we believe the current risk to the Vietnamese economy from increased leverage and overextended property development are considerably less than the historical periods with which comparisons have been drawn. We consider 5 questions. 1. Is Vietnam's over-leveraged? 2. Does Vietnam face macroeconomic instability? 3. Has Vietnam overinvested in unproductive assets? 4. Is Vietnam consuming more than is produced? And 5. Is Vietnam's external borrowing position precarious? Is Vietnam over-leveraged? Domestic bank credit to the private sector has increased relative to GDP over the last 10 years and currently stands at a similar level to Malaysia and Thailand, which have substantially higher GDP per capita than Vietnam. However, the current estimated level of between 124% of GDP is substantially lower than the levels since in Malaysia and Thailand in 1997, 155% and 167% respectively. Two, the BIS estimates that the equivalent measure in China in H1 2022 was 184%, and three, the rate of expansion in private sector bank credit GDP over the past 10 years in Vietnam has been somewhat slower than in 1999 to 2009 or in Malaysia or Thailand in 1987 to 1997. Meanwhile, we estimate that total private sector credit in Vietnam is currently around 140% to 150% of GDP, compares to around 200% and 240% in Malaysia and Thailand in 1997, respectively. Does Vietnam face macroeconomic instability? Inflation was a major problem in Vietnam in 2004 to 2012, but average CPI inflation has been below 5% since 2014, while the Vietnam dong depreciate to the US dollar in 2022. The extent of this appreciation was rather smaller than that of most other regional or major global currencies. Moreover, while there was a period of elevated volatility in interbank interest rates immediately following the VTP SCB event, subsequent stabilization in interbank rates suggests that the SBV was successful in addressing potential liquidity issues in the banking system. Has Vietnam overinvested in unproductive assets? Gross fixed capital formation has averaged around 30% of GDP in Vietnam over the past 10 years, taking up to 32% in 2021. This is substantially lower than in China over the past 10 years, or Malaysia or Thailand in the run up to 1997. Is Vietnam's external borrowing position precarious? The World Bank estimated Vietnam's total external debt, including public sector external debt, at 39% of GNI in 2021. 2022 data is not yet available. This contrasts with figures of 65% in Indonesia and 75% in Thailand in 1997. The World Bank's data for 2021 put Vietnam's short-term external debt at just under 10% of GNI, and its long-term external debt of 30% of GNI was roughly equally split between the public and private sectors. Meanwhile, Vietnam's short-term external debt in 2021 represented 30% of reserves, in contrast to 141% in Thailand and 188% in Indonesia in 1997. Now we come to the conclusion. While Vietnam's leverage and external borrowings have clearly increased over the past 10 years, we believe that the current position is manageable. In particular, while certain property developers could face financial difficulties as a result of high financial leverage and or low sales progress at specific projects, Vietnam does not appear to have overinvested in unproductive assets on a macro level and does not appear to be dangerously reliant on external borrowings. Banks' exposures to real estate loans and corporate bonds are discussed in detail in the banking section of this report. Vietnam's economy in 2008, 2011, and 2022 figures 74 key macro indicators in 2008, 2011, and 2022. Context 2008 foreign inflow surged as Vietnam joined the WTO in 2007. SBV purchased around 13 billion US dollar for reserves and simultaneously pumped Vietnam Dome into the system. 2011, due to the global financial crisis, the SBV started expansionary monetary policy in August 2008. The government released stimulus packages of 6.7 billion US dollar in 2008 and 2009. 1 billion US dollar to support lending interest rates, which partly contributed to the real estate bubble. 2022, the Fed raised rates aggressively to combat 40-year high inflation. Authorities engaged in high-profile anti-corruption activities, marked by the arrest of key people at large real estate companies. The government issued Decree 65 regulating corporate bond issuance and rate and trading. Figure, figure 65 credit growth. Figure 66 money supply. Figure 67 CPI. Figure 68 policy rate refinancing. We believe the current situation is different from that happened in 2008 and 2011. The economy was over-leveraged with average credit growth of nearly 54% in 2007, which remained high at around 34% in 2009 and 2010, compared to an average of 12.9% in 2020 to 2021. This caused inflation to surge to nearly 30% in 2008 and nearly 20% in 2011, compared to 4.5% year-over-year as of December 2022. The SBV has more ability to defend the exchange rate due to improving foreign reserves. In 2022, we estimate the SBV sold over 25 billion US dollar to defend the dome, reducing foreign reserves to 82 billion Vietnam dome, 82 billion US dollar compared to 109.4 billion US dollar as of end 2021. Banking system health has improved with on balance sheets NPLs at 1.9% as of end 2021 compared to 3.3% in 2011 and 4.9% in 2012. Also, the SBV has controlled credit to the real estate sector in recent years by raising the rating index for real estate loans to 200%. And that brings me to the end of my presentation about the macroeconomic risks in context. And if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can support you. Like, subscribe, and share this video to everyone to know more about our channel. Hope you guys have a nice day. Thank you for your listening and see you next time.